Everybody's staring at the Fed. Are they cutting rates again? What is Powell going to say? Is inflation under control? All that stuff. But here's the secret. The Fed is basically already in cut mode. They're going to keep massaging the language. They're going to pretend that this is a hard decision, but they're cutting because they're worried about jobs. They're worried about layoffs. They're worried the economy blows a gasket on live TV. Fine, great. Thank you for playing. But the real power hour is after the bell, when Microsoft, Alphabet, and Meta open their books. Why do you care? Because these three names are basically the foundation layer of this market. They're the cash printers, the AI capex engine, and the attention monopoly. If Microsoft shows strong cloud growth, strong margins, and is still spending like crazy on data centers, well, that tells you that AI infrastructure demand is still very real. Not future, but very now. If Alphabet shows search and YouTube ad dollars still rising, while Google Cloud grows and stays profitable, well, they just proved that they're not just an ad company anymore. And that is how you defend a multi-trillion-dollar valuation. Now, if Meta shows ad revenue still surging, users still growing, and capex that looks like we're investing because this is working instead of we're investing because we're desperate, then Meta is basically telling you that the consumer is still spending. Businesses are still buying ads, and attention is still monetizable at scale. So I'm going to say this as plainly as I can. You can obsess over Powell's presser, but the biggest macro indicator in the world right now may be Meta's ad revenue line, Microsoft's cloud revenue line, and Alphabet's cloud profit line. If those hold, this market is still built on cash flows, not crazy hype. If those crack, then all the AI bubble talk stops being content and starts becoming risk. So today's bomblet, the Fed cuts rates, but big tech decides whether the market still has a future or just got really expensive.